Hello, I'm Ben from Modern Graham, and today we are going to do a Modern Graham valuation of Palantir Technologies. So we've got the ticker here of PLTR, and the current price is $40.98. The sector is technology, and the industry is software. The balance sheet, these are the items on the balance sheet that I find to be most important, and they will all play a role in the valuation to come. Now, when you come down here and see the earnings, we have negative earnings. And though we have seen positive earnings here, the earnings per share MG, which is a weighted average of the last 5 years of earnings, and it stands for earnings per share Modern Graham, is still negative. And so the valuation does not like this. Now, that doesn't mean that it's not an interesting company to look at and to keep an eye on. So we're going to keep going. But what it does mean is that a lot of the Modern Graham metrics are not going to look good. But let's go ahead and take a look. So dividends, again, also zero. There's no dividends. That is an issue. We always like to see dividends, and we like to see dividend growth. But here we can we can see the chart, and earnings per share have been improving year after year. So that does make the company rather intriguing. So let's continue here. Stage 1 of the analysis is to determine if the company is suitable for the defensive investor or the enterprising investor. And the defensive investor is somebody who's not willing to do a lot of research. So they have very stringent requirements as to the company's financial statements to make sure that the companies that they are looking at are pretty strong. So here we have the first one is market cap has to be over 2 billion. It passes that easily. Current ratio has to be over 2. It's 5.92. It's got a great current ratio. Positive earnings per share for 10 years. Well, we don't even have 10 years of earnings at all to look at. So it's going to fail that for a while still. And the same thing, dividend payments for 10 years. We don't have any dividend payments, so it fails that. Coming down here, increase in earnings per share. That actually, we don't have earnings per share 10 years ago, so we can't pass that either. But I mean, we get to a point where we're not going to pass defensive, so it doesn't make sense to keep looking at that. We are not suitable for defensive investors here. What about enterprising investors? Well, current ratio has to be over 1.5. It passes that. Debt to net current assets needs to be under 1.1. It passes that because it has no debt whatsoever. And it has to have a positive earnings per share for 5 straight years prior. It doesn't have that. So it fails that test, and it doesn't pay a dividend. So it fails that test. Earnings per share greater than 5 years ago, it actually passes that. This is an error in the spreadsheet because from negative 51 cents to negative 29 cents is growth. It's still negative, but it is growth. So we pass that. So we come to a score of 3. And the thing here is that if the company were just to pay a dividend, even if it was only a penny, it would suddenly be suitable for the enterprising investor. And that is intriguing because that means that solid enterprising investors who are doing a lot of research may want to keep this one on their watch list to really keep an eye out for when that time comes. But even if you're not wanting to do that, you can still speculate. The thing about speculating is that you want to make sure that it's not a major part of your portfolio. You need to make sure that you are sticking to defensive investor or enterprising investor companies for the majority of your portfolio. But you can make speculative plays, and this one could fit in that. We'll keep going here. Stage 2 is to determine the intrinsic value. And the Modern Graham value formula requires a positive earnings per share here. And so we're going to end up with a 0 value, which we do. We anticipated that coming in, but it does have a really strong growth estimate. So at some point very soon, it is going to have a positive earnings per share, and that's going to kick that value pretty high because we're going to have that. So right now it is showing overvalued, but it will switch to undervalued at some point. I anticipate. We'll see what happens with it, but I do think that will happen. And then the Modern Graham grade, it does get an F grade right now because we are not suitable for enterprising investors. It is overvalued. It's not trading below its Graham number. It doesn't pay dividends, and it has 0.5 points because it is trading below its industry average. So technically, it gets a D rating, and the spreadsheet doesn't like calculating some of this stuff when the values are completely blank. But anyway, moving on to stage 3. So if you've gotten this far and you've determined that, I want to move forward and start speculating on this company and figure out, maybe I can find a way to make some money. Well, you need to do further research. And there is some ways of doing that. First of all, net current asset value is a bottom level to it. And it's trading well above that bottom level. It's, a liquidation value. And so we don't really have to worry about that. Graham number formula is another way of looking at all of these Graham requirements from the intelligent investor. And the Graham number is 278. Again, the company's trading well above that. And then the PEMG, it doesn't like this because we have negative earnings per share. But if that were to go positive, then we still would have a really high PEMG. So that's something to keep in mind as well. But that is a very strong current ratio. The PB ratio is a little bit high. Dividend yield, again, I wish that it paid a dividend. And I wish that the earnings were positive because those things would really show a lot of attractive qualities to this company. But let's go ahead and take a look at the chart because we're talking about speculating here. So let's go ahead and speculate about where we think this is going to go. So looking at the chart here, we have seen tremendous growth in the price of this company. Over the last, 5 months, it has doubled in value. And that does raise some concerns about whether or not that is sustainable, especially because the RSI, the relative strength index here, is pretty high right now. And even so, these other lines I've got here, this is a short-term moving average of the RSI and a long-term moving average of the RSI. Both of those are high too. So there's a lot of pressure to bring this price down. And you can see that here too in a Fibonacci sequence. We've got a trend-based one. We go up here and then we come back down. And then you can see we're pushing on that threshold here. This is going to be a major resistance point. So I would not be surprised if it came back down a bit. Now, at some point, it might stall a little bit and have a slower movement down, in which case the strength index would come down. And these Bollinger lines, these dark green lines here, which show the volatility in the stock, essentially, those would tighten a bit. And then I would become very, very intrigued to see what happens. I'd be also interested to see this date here, this earnings date, could be where that movement comes. We might see this start to trade inside here or even come down into this range. And then leading into the earnings, it would be interesting to see what will happen there. But that is my prediction. We're going to stay in this area here and then either jump up or jump down here in November when we hit those earnings. But that's what we've got. I hope you enjoyed this video. Be sure to hit the like button and subscribe to the channel if you want to see more. Thanks for watching, and I will catch you next time. Take care.